Good morning, traders. It's Thursday, March 17th. I just did a long, detailed video and realized my headset was not turned on. So I am redoing it again. I'm going to fly through it. We're getting close. I'm hoping to get this out before 9 o'clock. So let's run through this real fast. Yesterday, FOMC meeting, big news, huge price action. Their announcement crushed the US dollar index. Here's the UUP. This is the daily chart. You can see where we're at. I've got the Fibonacci downside target already done from the video I just did for you. But taking a look, going from this high to the low to this correction, and it shows the downside move around 24.37. Well, right now in pre-market trading, UUP is trading down at 24.50, so it's trading somewhere right down in this area, close to that level. We've talked about the UUP before, and the US dollar index has got this critical line in the sand. Somewhere around here, we're going to find critical support in the market. Every time it's touched this level, we've seen a massive multi-day, multi-week bounce. Very strong bounces off this level. So we're going to hit a Fibonacci measured move pretty much. We're hitting significant support. I wouldn't be surprised we see the US dollar have a strong bounce within this downtrend here, and that could put the top in gold and in commodities. Right, we're seeing the US dollar go into free fall mode, which has fueled all the commodities. Everything was up yesterday: bonds, stocks, commodities. So I think we're going to start to see that kind of stall out after today, with the US dollar opening down at support, and it might trade there for a day or so. But once it stabilizes, I think we're going to see it rebound to have a really sharp move up, which will put some downward pressure on the commodities. Now let's just take a look at the futures this morning of the SP 500. Had a little bit of volatility. It moved up fairly nicely last night, started to move back down. But here's the interesting information. We'll go to the 10-minute chart, and we'll just zoom back a couple days here. So overall, we've had a couple big price spikes, or a couple price spikes get filled. A couple days ago, we had these two price spikes. We had one pre-market. The market moved up, almost got there. And then after the market closed, another price spike up to that level. We've been seeing some double and triple spikes lately, which is interesting. Not sure why, but the market continued to move up, filled that price spike. And then yesterday we had the FOMC meeting news. Now this is the 10-minute chart. Usually I follow the 30-minute. And to see this price action on 30-minute, it's just a couple big bars straight up. What goes straight up usually comes straight back down. And of course, as soon as the market closed yesterday, we saw three spikes to the downside, and the market did what it always tries to do. It runs higher, tries to get all the market knows it wants to go down. It's almost like it's pre-programmed for the next day. What it does is it runs up, tries to get shorts out of the market by running to new highs, tries to get everyone bullish to buy long, and then it completely slaughters them and comes right down, and it filled this price spike pretty much to the tick there this morning. Now just about what is this, about 40 minutes ago, we got another spike to the upside. So it looks like the market wants to work itself back up to test yesterday's highs, and hopefully it goes beyond that and continues to move even higher, because we are long SSO and still have about 5 days left. The cycle analysis for the SP 500 shows 5 days left before we see it top out, and then I think we're going to run into some serious problems. So I think we're about 5 days away from something like this, and then we're going to get into some type of topping phase. The market's going to struggle. It's going to be choppy. It'll be tough to trade, high volatility. It could do it for a month, could do it for 3 months, but I think that's what we're going to get ourselves into. And then we're going to see the market roll over just like this to new multi-year lows, and roll over to new multi-year lows going forward. That's what we're looking for. Potentially ultimate bear market inverse ETF play to the downside right up here. We're potentially only a week away from a trade. Some of these inverse ETFs long term could be up to 300, 500% if you were to hold it for the entire bear market for the SP 500, which could last 6, 8, 12, 14 months. It could be a long ways out. Anyways, let's just keep on flying along here. Precious metals, gold up about 3%, silver up about 3%. You can see we've got this big move up. We're coming into resistance. We're still in this our overall cycle analysis still shows the downside. It's kind of topped out and is kind of pointing like that. So we're still in this kind of topping phase. And I talked about it the other day that this is kind of the line in the sand. And We had a short-term cycle that was turning up yesterday. If you go and review the gold section on yesterday's video, yesterday we had short-term cycles moving up. It was going to give us some upward pressure for 2 or 3 or 4 days, and then it was going to roll over, and we could see the market come down. So it happens to coincide that we got a big pop with that cycle bottoming out yesterday. And I don't follow news, I don't follow announcements, I don't follow fundamentals. I follow price action. And it's interesting. I know a lot of people are always saying, well, price is what's driving the market. It's totally news driven. Well, if you use cycle analysis and you have your pivot lows in, your pivot highs in, your shorter term, your longer term, it's amazing how you'll find most of that news happens to fall on those cycle high days and cycle low days. It's like the market is pre-programmed and it just happens to be that news that is the trigger, but it was already figured out and kind of factored into the whole equation weeks or months in advance. So I don't follow the news so much. Usually when I see cycle highs and cycle lows, I figure that's just what the market is doing. I don't really base it on that news. It's just that news happens to fall on those dates because all this stuff is kind of pre-programmed. You can see it well in advance, these moves. And a lot of times cycles do top out or bottom out or have turning points during key data. We've got weekly options, bi-weekly options, monthly options. We've got earnings. We've got all the different economic data that comes out on a regular basis, and that's what creates a lot of these cycles. So um, don't get too caught up with news because really it's cycle analysis, it's money flow. These are reoccurring wave-like patterns in the market, and we can take advantage of them and see them ahead of time. Taking a quick look at miners, obviously everyone's trigger happy on miners. Any good news in that sector, everybody piles in. Huge move up, over 8% on the index yesterday, and not looking to do anything in this sector at this moment. Overall, I'm still kind of like the market's topping out here. And I think with the dollar about to gap down at support and rally, I think we could see gold and silver and miners pull back and form this topping phase, and eventually we'll see it lose some luster and wash itself out. And then I think we'll see it take off to the upside. And that's kind of what I'm still feeling is going to happen. Jumping over to energies real quick, natural gas up 1.33%. I do feel as though we're putting in a significant major bottoming pattern. I think we got a potential basing pattern here. This is a multi-year basing type of pattern, but we've got our three surges to a low. 1, 2, 3. And this is a very bullish pattern, and there's a lot of work that needs to be done before natural gas is in a bull market. But I do feel as though it's losing some of its steam here. We got the 20-day moving average moving down. I think it could struggle. Not a whole lot that I would do. I'm not interested in going long or shorting this. We're just ignore it for now, but I do feel as though it's going to run out of steam here, and it could start to become very unpredictable and chop around. Crude oil up 1.4% today. We've been bullish on this for a while. We had that double bottom. We had that Fibonacci extension target touched, did a double bottom. It's rallied all the way up. We've got cycles topping out here in about 2 or 3 days. We do have crude oil trading right at resistance here. If I just zoom into the chart, you can see where it is struggling. This little low right through this consolidation and this high over here. So this is right where crude oil is struggling. It's moved up, sold back down today. I think we're going to see it kind of chop around and start to put in a little bit of a topping pattern before it starts to kind of, it's going to ping pong around in here before it starts to break down. And I think we see a pull back to 32, potentially 30 area. And as crude oil stalls out and softens and starts to go down, it's going to pull the stock market with it and kind of, I think, be a catalyst or kind of the early pressure on the market that's going to start to pull it down. Anyways, I think that's it for this morning. Hopefully I kind of covered everything, and we'll talk to you soon. Bye-bye.